Right. Let's talk about Bitcoin, the internet money that's now impossible to ignore. As of today, July 20th, 2025, Bitcoin has crossed the 1 crore rupee mark in India, about $120,000. This isn't just a number, it's a psychological milestone that's thrust Bitcoin into the mainstream. On one side, critics call it a digital illusion, a bubble waiting to burst. On the other, believers see it as the future of finance. The debate is fierce, with fortunes and reputations on the line. We're here to unpack both sides and explore why smart people see such different futures in the same digital coin. Let's start with the critics, the so-called bears. These are the people who look at Bitcoin and see not a revolution, but a risky gamble, a speculative frenzy, or even a disaster waiting to happen. They're not just skeptics on the sidelines. They're some of the most influential voices in global finance, and they're not shy about making their opinions known. Jamie Dimon, CEO of JP Morgan, famously called Bitcoin a pet rock, arguing it does nothing and produces nothing. In his view, Bitcoin is little more than a digital trinket, an object of fascination that lacks any real utility or underlying value. He's repeatedly warned investors that it's a distraction from real innovation in finance, and that it could end badly for those who get swept up in the hype. Academics like NYU's Aswath Damodaran dismiss it as a currency nobody uses, thanks to wild price swings. For them, Bitcoin's volatility makes it impossible to serve as money. How can you price a cup of coffee, a car, or a house in something that might be worth half as much or twice as much next week? Damodaran and his peers argue that a true currency needs stability, trust, and widespread acceptance, qualities Bitcoin in their eyes simply doesn't have. Why spend Bitcoin on pizza today if it might double in value tomorrow? This question isn't just theoretical, it's a real dilemma for anyone holding Bitcoin. The famous Bitcoin pizza story, where someone paid 10,000 Bitcoins for 2 pizzas in 2010, is now a cautionary tale. Every time the price surges, it reinforces the idea that Bitcoin is better as a speculative asset than as a practical currency. Nobel laureate Nouriel Roubini calls it the mother of all bubbles, arguing it's backed by nothing but hope that someone else will pay more. He's compared Bitcoin to the worst excesses of financial history, warning that its meteoric rise is driven by irrational exuberance and a lack of fundamentals. For Roubini, the entire crypto market is a house of cards, destined to collapse when reality sets in. Charlie Munger called it immoral, evil, and worthless, a tool for speculators and criminals. He's gone so far as to say he wishes it had never been invented, arguing that it enables illegal activity and preys on the financially naive. For Munger, Bitcoin isn't just a bad investment, it's a threat to the moral fabric of society. Even India's Reserve Bank governor warns that cryptocurrencies could threaten financial stability. He's voiced concerns about the risks to consumers, the potential for money laundering, and the challenge of regulating a borderless, decentralized technology. In his view, the rise of crypto could undermine the authority of central banks and disrupt the delicate balance of the global financial system. These aren't just opinions, they're warnings from the guardians of the financial system. Regulators, bankers, and economists are sounding the alarm, urging caution and calling for tighter controls. They see Bitcoin as a potential threat to everything from consumer protection to national security, and they're determined to keep it in check. To them, Bitcoin is a digital wildfire, and everyone's running toward it with buckets of petrol. The fear is that unchecked enthusiasm could fuel a financial inferno, one that spreads far beyond the world of crypto and threatens the broader economy. The skepticism is real, and the stakes are high. Billions of dollars are on the line, and the outcome could reshape the future of money itself. For every person dreaming of crypto riches, there's another warning of disaster. But the critics aren't the only voices in this debate. The story of Bitcoin is far from one-sided, and the conversation is just getting started. Now let's flip the coin to the bulls, the billionaires, tech evangelists, and visionaries who see Bitcoin as the future of money. These are the people who aren't just investing. They're betting their reputations, their companies, and sometimes even their legacies on the idea that Bitcoin is here to stay. For them, this isn't just a passing trend or a speculative bubble. It's a revolution in how we think about value, ownership, and the very nature of money itself. Michael Saylor, CEO of MicroStrategy, has put billions into Bitcoin, calling it digital gold. He's not alone. Many high-profile investors echo this sentiment, arguing that Bitcoin is the 21st century answer to gold, scarce, portable, and immune to government manipulation. Saylor predicts a single Bitcoin could be worth millions thanks to its fixed supply of 21 million coins. This scarcity, he argues, is what gives Bitcoin its power. Unlike fiat currencies, which can be printed endlessly, Bitcoin's supply is hard-coded and transparent. That's a game changer for anyone worried about inflation or currency devaluation. Bulls argue Bitcoin is a safe haven in a world of endless money printing and inflation. When central banks flood the market with new money, the value of traditional currencies erodes. Bitcoin, on the other hand, stands apart as a digital fortress, an asset that can't be diluted or devalued by political decisions or economic crises. Wall Street converts like Mike Novogratz and Tim Draper see a snowball effect. As more institutions buy in, Bitcoin becomes more legitimate and valuable. Pension funds, hedge funds, and even insurance companies are starting to dip their toes in, creating a feedback loop of adoption and price appreciation. They say critics are stuck in the old financial world, missing the point of a decentralized, borderless network. To the bulls, Bitcoin isn't just a new asset class. It's a new way of thinking about trust, transparency, and financial freedom. The old guard, they argue, is clinging to outdated models that can't keep up with the pace of digital innovation. For them, Bitcoin isn't a bubble. It's the pin that could pop the old system. It's a disruptive force, challenging the very foundations of banking, investing, and even government control over money. They're betting fortunes that this is just the beginning. Early adopters believe that as more people wake up to Bitcoin's potential, the network will only grow stronger, and the rewards for those who got in early could be life-changing. The optimism is contagious, and the vision is grand. For the bulls, Bitcoin isn't just an investment, it's a movement, a chance to reshape the global financial system and empower individuals everywhere. But what's behind the critics' stubborn resistance? Why do some still see Bitcoin as a threat rather than an opportunity? The debate is far from over. Critics argue Bitcoin lacks intrinsic value. Unlike stocks, houses, or gold, it produces nothing and has no industrial use. Its value, they say, is pure speculation. Buy now, hope to sell higher. They compare it to tulip mania driven by FOMO, not fundamentals. Volatility is another concern. Bitcoin can lose 20% in a day, making it a terrible store of value or unit of account. Regulatory risks loom large. Governments could ban or restrict it overnight. Security is shaky. Exchanges collapse, scams abound, and lost passwords mean lost fortunes. And the environmental cost of mining is staggering, raising ethical questions in a warming world. Bulls see things differently, focusing on digital scarcity and the network effect. While skeptics worry about volatility and regulatory risks, the bulls are captivated by Bitcoin's unique properties. They see a future where digital assets, not just traditional stocks or bonds, play a central role in the global economy. For them, Bitcoin isn't just another speculative asset, it's a revolution in how value is stored and transferred. Only 21 million Bitcoin will ever exist, a feature, not a bug. This hard cap is coded into the protocol, making Bitcoin fundamentally different from any currency that can be printed at will. The bulls believe this digital scarcity is what gives Bitcoin its edge, setting it apart from both fiat currencies and even gold. In a world of endless fiat money, this scarcity makes Bitcoin a powerful store of value. Central banks can print more dollars, euros, or yen, but no one can create more Bitcoin. This is why many see it as digital gold, a hedge against inflation and currency debasement. They believe as trust in traditional currencies erodes, people will flock to Bitcoin, just as they once did to gold. Throughout history, when confidence in money falters, people search for alternatives. Bulls argue that Bitcoin is the modern answer to this age-old problem, offering a borderless, censorship-resistant way to preserve wealth. The network effect is key. Every new user, company, or institution makes Bitcoin stronger and more valuable. As adoption grows, so does the utility and security of the network, creating a self-reinforcing cycle that's hard to disrupt. Rising prices attract more users, creating a feedback loop. This momentum draws in not just retail investors, but also large institutions and even governments, all eager to participate in what they see as the future of money. Bulls argue you can't value Bitcoin like a stock. It's a new protocol for transferring value globally. It's more than just a digital coin. It's an open-source financial network, accessible to anyone with an internet connection, and capable of moving billions of dollars across borders in minutes. If it becomes the base layer for global finance, even $1 million per coin could be conservative. The potential upside, bulls argue, is almost unimaginable if Bitcoin truly becomes the backbone of a new, decentralized financial system. It's a bold vision, and they're putting real money behind it. From everyday savers to billionaire investors, the bullish camp is betting that Bitcoin's fundamentals will ultimately win out over short-term noise. But Bitcoin's journey has been anything but smooth. Wild price swings, regulatory uncertainty, and technological challenges have tested even the most committed believers. Yet, for the bulls, these obstacles are just part of the story, a story they believe is still in its early chapters. Bitcoin's history is a rollercoaster of booms and busts. In 2013, it soared past $1,000, then crashed after the Mt. Gox exchange collapsed. The 2017 bull run saw prices near $20,000, fueled by ICO mania, then another crash. In 2021, institutional adoption pushed it to $69,000, but the Terra Luna collapse triggered another brutal bear market. Each time, Bitcoin was declared dead, yet it always recovered, reaching new highs. This resilience is central to the bull case. What doesn't kill Bitcoin makes it stronger. The cycles are brutal, but they keep coming. Every crash shakes out weak hands. Every recovery draws in new believers. The pattern is clear, but the future is never guaranteed. What keeps driving these cycles? Enter the halving. The halving is Bitcoin's built-in scarcity engine. Every 4 years, the reward for mining new Bitcoin is cut in half, reducing the rate of new supply. This supply shock, if demand holds or grows, pushes prices higher, at least in theory. Past halvings in 2012, 2016, and 2020 were followed by explosive bull runs. The most recent halving in 2024 set the stage for today's surge past 1 crore rupees. The schedule is predictable, the scarcity is transparent. For bulls, the halving is a marketing event and a core value proposition. Absolute scarcity in a world of infinite money. The question isn't if the price will rise after a halving, but when and by how much. So whose opinion matters more, the professors or the billionaires? Enter skin in the game, a concept by Nassim Taleb. Trust those who risk their own money. Academics and central bankers face little personal risk if they're wrong about Bitcoin. Investors like Michael Saylor have billions at stake. If Bitcoin fails, they lose everything. This doesn't guarantee they're right, but it means their conviction is real. Many find the bulls' arguments more compelling because they're walking the walk, not just talking. It's a powerful psychological bias. We trust those with something to lose. When weighing advice, always ask, what do they have at stake? So what comes after 1 crore? Critics see a bubble destined to burst, warning of volatility, lack of value, and looming regulation. Believers see a revolution, driven by digital scarcity and network effects, with even higher prices ahead. The risks are real. Black swan events, regulatory crackdowns, or tech breakthroughs could crash the market. History is littered with failed predictions from both sides. 1 crore isn't the end, it's just another chapter. Will the critics be vindicated, or will the bulls celebrate as Bitcoin soars higher? The only certainty is that the world is watching. For now, the 1 crore rupee question remains open and endlessly fascinating.